Hello and good evening. Welcome to Capital Market. I'm Tempula Shaju. The first half of the year saw one of the most severe shocks to economic activities that Nigeria has seen in years. In a proactive sense, however, the structural hurdles that impacted the non-oil sector for the better part of the first half is expected to affect the second quarter non-oil GDP, while lower production volumes continue to depress commodities prices, and that keeps changing the GDP numbers. With this development, fund managers, regulators, as well as investors are not resting on their oars as the quest for return on investments continue to catalyze challenges into opportunities. On the show this evening, we'll cross the line a bit to dissect some of the actions or developments taking place at the National Association of Securities Market Dealers over-the-counter platform to shore up liquidity, grow the business environment, and ultimately improve the economy through innovation, regulation, as well as transparency in trading. Mr. Bola Jamale, the CEO of that platform, will be joining us later on the show to give us a sense of what these initiatives at that platform is. But before that, let's take a look at some of the news that's made the rounds in the markets this week.
The United Kingdom will continue to strengthen its relationship with Nigeria in the area of trade and investment. This statement was made at the stock exchange this week by the UK Prime Minister's trade envoy to Nigeria, Mr. John Howell. He explains that the UK will not redefine its ties with Nigeria, but sustain the existing partnership across the markets.
I think that what you've got to look at is the enormous enthusiasm that there is in the UK for doing business abroad. We now have a Department of State, the International Trade Department, to be able to deal with that and be able to galvanise British business into looking at opportunities overseas. And I think that that will play to Nigeria's strengths as well as to our own.
During the week, the governor of the Central Bank of Nigeria reaffirmed that deposit money banks in the country remain strong despite the current economic challenges. This was part of the issues addressed during the MPC meeting on Monday. Mr. Godwin Emefiele's comments supports reports by EcoBank Research Group, Exotics Partners, and the Nigerian Deposit Insurance Corporation on the state of Nigerian banks.
Consequently, members were of the view that an upward adjustment in interest rates would strongly signal not only the bank's commitment to price stability, a major mandate of the central bank, but also its desire to gradually achieve positive real interest rates. Such a decision, it was argued, gives impetus to improving the liquidity of the foreign exchange market and the urgent need to deepen the market to ensure self-sustainability. Members were of the opinion that this will boost manufacturing and industrial output, thereby stimulating growth, which is desired at this time. The committee's decision. The MPC, recognizing that the bank lacked the instruments required to directly jumpstart growth, and being mindful not to calibrate its instrument in such a manner as to undermine its primary mandate and financial system stability, in assessment of the relevant issues, was of the view that the balance of risks remains tilted against price stability.
Consumer goods sector listed company Tiger Brands has reverted to its original name, Dangote Flour Mills PLC, the name in which the company was listed on the Nigerian Stock Exchange in 2007. In a statement to the Nigerian Stock Exchange on Monday, Tiger Brands explains that the decision was based on a resolution approved by the shareholders at its last annual meeting in April. The statement says the name change has been implemented by the Stock Exchange and the Central Securities Clearing System. Shares of Dangote Sugar Refinery have gained some 16% in 2016, outperforming the broader market index by around 18%. This is according to the investment and securities research firm FBN Quest. In an earnings review report released on Friday, the market is forecast to react positively to the latest quarterly results of the only sugar refinery listed on the local bourse. Dangote Sugar's second quarter sales were up 16% on the previous quarter to 37.9 billion naira, with a net profit increase of 20%. The analyst report says Dangote Sugar Refinery is benefiting from higher sales in Lagos and the northern region, as relative calm holds in the troubled northeast. Integrated energy provider Forte Oil plc has reported a higher revenue of 84.42 billion naira for the first half of 2016. This is up from 61.16 billion naira in the same period a year ago. Forte Oil also posts pre-tax profit growth to 4.26 billion naira from 3.25 billion naira in 2015, while operating profit for the period climbed to 6.84 billion naira. Earnings per share was reported higher to 187 kobo for the period. Forte Oil is expected to give investors more details about its performance in the last 6 months and then provide the outlook at its facts behind the figures meeting next week. Integrated agro-industrial company Presco impressed investors this week with the release of its first half of the year earnings. A revenue increase of 7.51 billion naira and the profit before tax of 4.12 billion naira stunned the market as profit for the period hit 3.01 billion. Presco also acquired an over 147 million naira plant and equipment during the 6 months ended June the 30th, 2016. Nestlé has reported an 80.44 billion naira revenue in its operating results for the first half of the year. The fast-moving consumer goods manufacturer, however, posted a challenged profit before and after tax. Analysts estimated losses for the period derived from the shortage in foreign exchange scarcity and the decline in consumers' purchasing power. In its statement to the exchange, Nestlé Nigeria continues to market and distribute food products within its locality and other African suburbs. The National President of the Trade Union Congress, Mr. Boboy Kegama, is calling on the federal government to abate the hardship in the country as the pressure on Naira and insecurity worsen. He made this call at a forum of the Association of Senior Civil Servants of Nigeria during the week. According to him, the effects of the devalued currency is hampering investments and efforts to secure the future of Nigerians.
As an import-dependent economy, we are bound to get nothing from devaluation. All that is going to happen is increase in prices of almost everything we consume, as we are witnessing currently. Moreover, a very good percentage of the middle class will be wiped off the scene. We are told that the government will listen to wise counsel and adopt more robust approach in handling the challenges in the foreign exchange market occasioned by the fall in the price of crude oil. The reverse is, however, the case. The fate of the masses, particularly workers, is now hanging in the balance as there is widespread hunger in the land. Government should therefore quickly, without measures that will cushion the biting effects of the devalued currency on the people, as anything to the contrary is likely to drag the entire country and its people into the precipice, a scenario that is not going to be beneficial to anybody.